I've got a tax variation, so I get taxed less throughout the year as we get paid. I do not get a big chunk of money at the end of the year. It just sort of helps me a bit with my cash flow. But in saying that, I still look forward to tax time. Are you a lover or are you a hater?
I'm a lover because I don't do the variation, so I get a refund. And I think, for anyone who has investment property, particularly custodians who listen, I think we generally do look forward to it because it's a time where we get depreciation refunded, which is not an expense that you typically outlay, so you can sort of get a bit of cashola back. I've got some stats to sort of start the podcast, which I thought were interesting. Number one is, and we talked about this maybe 3 weeks ago in the podcast, the top 3.5% of all income earners in Australia, so in the top 3.5% income bracket, pay 31.5% of all of the tax that's collected in Australia.
So are you saying that that's perhaps slightly less than you would think the top income earners would be paying? What they should be paying closer to 45% if they have,
No, I was actually surprised at how big it is. Like the top 3.5% pay nearly a third of all tax collected in Australia. So I thought that was very high, but probably more relevant to us, the everyday folk, is the ATO every single year, they actually process $30.5 billion worth of tax refunds. So they sit on $30.5 billion throughout the year and then refund it at the end of tax time. Imagine how much interest that would save them. Like that, they've probably got that sitting in their offset. Government's got it sitting in their offset, offsetting $1 trillion worth of debt.
I was thinking how much
interest.
I was actually thinking how much interest it would be earning them, not actually saving them.
Well, I wouldn't be earning them much today, but in years gone by, it would be quite a lot. The average Aussie gets a refund of $2,820.
Now, that's interesting because if we compare it to our average client, which we call custodians, for those who don't know, our average custodian client actually has 3 properties. So they've built a pretty good portfolio. We've got some with 10, we've got some with 15, we've even got a couple with 20 properties, which is amazing. But if we just go off the average custodian having 3 properties, they get a tax refund of about 10 to 15,000. Now that might sound like not a lot, but interest rates are low, so we're actually cash flow neutral to positive now more than ever. Whereas previously you might get a little bit more tax, but you're paying a bit more on your outgoings. Correct?
Yeah, correct. So most people, well, it depends on your situation. Obviously, you've got your actual costs throughout the year, interest, rates, all of those sorts of things. They offset your rent, and then there's the paper loss, I guess, which is depreciation or any sort of upgrades that you've made. And just for anyone who is listening, even if you're not a custodian client, you can actually claim depreciation on any property built after 1987. September 1987 is the critical date. Spoke to my brother-in-law, Tommy, last week and asked, the accountant, and asked what's the critical date. You can claim depreciation on the building structure and what they call permanently fixed items on the property, solar panels, security systems, that sort of thing. And regardless of when the property was built, they can also depreciate internal fixtures such as floor and window coverings, appliances, and air conditioners, provided, again, that September 1987. That is the critical one. And also, one last one, don't forget, a lot of people have worked from home this year. You can claim a lot of your working from home expenses.